Hello and welcome back to TaxFlow to CashFlow, the show where we flip the script on how wealth is created and show you how tax strategy is not just about saving money, it's about structuring power. I'm your host, Denise Givan, the tax strategist, and today we're going to dive deep into one of the most misunderstood but most powerful strategies used by the wealthy. It's called entity stacking. Now, if you've ever wondered why some people pay 10 times less in taxes while earning 10 times more, or how to keep their personal assets protected even when they run multiple businesses, this episode is for you. We're talking LLCs, S-corps, trusts, and how layering them the right way creates leverage, legacy, and long-term legal protection. All right, let's get ready. Let's dive in. Now, what is entity stacking and why it matters? Entity stacking is the strategic layering of multiple business structures like LLCs, S-corps, and trusts to minimize tax liability, protect assets, and create separation of roles in income. It's the difference between being a sole hustler and a wealth architect. Let me give you a simple definition. Entity stacking is using more than one legal entity, each with a distinct role to create protection, planning, and performance in your business life. Now think of it like building a fortress. One entity owns the assets, one entity operates the business, and another protects the wealth or passes it down. Why do this? Because separation equals protection, structure equals clarity, and layering equals leverage. And most importantly, the IRS sees these as separate tax identities, which mean you gain more control over how and when income is taxed. Now, let's talk about LLCs, S-corps, and trusts. What each entity does best. Now, let's break it down. LLC, limited liability company, it gives you flexibility, great for holding assets, offers liability protection, and pass-through taxation. Use it to own real estate, hold business assets, and serve as a holding company. Now, S-corps, which is corporations, tax election, not a structure, allows you to pay yourself as both employee and owner, saves on self-employment tax, but you must file payroll and maintain corporate formalities. Use it when business is making $50K plus in net income, you're actively working in the business, and you want tax savings on earned income. Now let's talk about trust. We have the revocable trust, irrevocable trust, or family trust. Now they hold ownership privately, avoids probate, can reduce estate taxes, and allows long-term legacy planning. Now you use it to pass down real estate or business equity, own life insurance policies, and keep family assets protected and private. Let's talk about the holding company versus operating company. What's the difference? This is the core entity stacking, knowing the role of each company. Now, the holding company, now what does it owns assets. Doesn't do business. It has no customers and has no services, may hold real estate, may hold intellectual property, and it may hold business shares. Think of it like the vault. It owns what makes you money, but doesn't interact with the public. Now, the operating company, it runs the day-to-day business, handles revenue, customers, contracts, employees. It pays the holding company or license its assets. Think of it like the front line. It takes the hits. It handles risk and keeps operations running. When you separate the maker of money from the holder of money, you reduce your risk, your audit exposure, and most importantly, your liability. Asset protection versus tax optimization. Know the game you're playing. So let's be clear, not every entity is for tax saving. Some entities are built purely for protection, to shield your personal home, to protect your brand, and to isolate risk between businesses. Others are built for tax optimization, like your S-corp to reduce self-employment tax, and trust to shift income across generations. Licensing companies to create internal deductions. Now, most people only think in terms of how do I pay less? The real question is, what's the smartest way to control the income, pay the tax, and protect what's left? Entity stacking, it gives you that control. Real estate versus digital business entity structures. Let's apply entity stacking to two common business types. Real estate investors stack like this. LLC number 1, hold property number 1. LLC number 2, holds property number 2. LLC number 3, holds property number 3. Now, you get the picture. So this is what you call Series LLC. Now, this is common in some states. Certain states don't allow it. But check your state to see if you are a real estate investor, to use what they call a Series LLC. And then you stack like this. You have the LLCs, and you also have a holding company, an LLC or a trust. It owns the properties LLCs, the master series. Now, the management company handles tenants, communications, contracts, repairs, things of that nature. This lets you isolate liability, deduct expenses through management fees, and shift income and profits legally. Now, the digital business owner, the coaches, the creators, and the consultants stack like this. Operating an S-corp, it runs your brand and pays your salary. Now, an IP holding LLC, which is your intellectual property, it owns your content, licensing it to the S-corp. Then you have your family trust. It owns the LLC and builds long-term protection. So stacking is a powerful tool. It lets you reduce self-employment tax, create deductible internal licensing, and it builds generational IP income. So my favorite is the trifecta structure for family enterprises. Now here's the secret sauce. My go-to setup for families who want to, if they want to reduce taxes, they want to protect assets, they want to transfer wealth, and they want that strategic control. Now, the trifecta model operating as, let's see. So the best part of this is husband and wife can partner up and create a partnership that runs the business and pays the bill. Now, you can also have a holding LLC that owns business assets, real estate, and trademarks. Then you also will have the family trust. It owns the holding company and bank accounts. With this stack, the partnership pays the holding LLC to use assets. That's tax deductible. Now, the holding LLC pays distributions to the trust. That's asset protection. Now, the trust passes wealth to heirs without probate or estate tax hits. Now, this setup is next level tax strategy and family legacy protection. And guess what? It's 100% legal. Now, let's wrap this up. Here's what I want you to walk away with. Don't just form an LLC and stop there. Your structure determines your strategy, your savings, and your security. Use each entity for its purpose: one to operate, one to own, and one to protect. This is how you move like the wealthy, with intentional infrastructure. Now, if you're ready to launch, build, or reset your business with a solid financial foundation while keeping more of your hard-earned money, then I want to personally invite you to join the Game Time Business Coaching membership. This is more than just coaching. It's a full strategic system designed for small business owners and entrepreneurs like yourself who are serious about taking action. Now, every month, we guide you through smart business structuring, tax strategies that legally minimize your liability, growth systems that help you scale without chaos, and the mindset shifts that turn a hustle into a real legacy. With expert support, structured training, and real-time guidance, you will navigate each quarter of your business with confidence, maximizing profits and protecting your financial future. It's game time, and this is how we build businesses the right way. Join this membership today. I am Denise Givan, the Tax Strategist, and this is TaxFlow to CashFlow. Let's turn structure into strategy and strategy into wealth. See you inside.